All right, everybody. Good evening. Veteran here, ITG Independent Traders Guild, and it's just before 11 p.m. Eastern Time on Sunday night, and I just got back from helping some dear friends and with some life struggles that they're dealing with. But wanted to run down and go back through the markets. Not so much backtrack from last week, but let's cast ahead. What do we got this week? JPOW, FOMC, Tuesday, Wednesday. We've got AMD earnings and we got Apple earnings. Obviously, Qualcomm, Pfizer, plenty other earnings this week, but the big ones that we track on the option pricing model and the big ones that we track on the PVI weekly volatility ranges. This week it falls with AMD on I think Tuesday and Apple Wednesday. So let's go on look and take a look at the weekly chart. On our left here we've got the VIX, the S&P 500 volatility. On our right we've got the S&P 500 itself. The three dots is weekly gravity points. Not essential, but these are both the weekly charts. 1 week, trading view. So the first thing that you should look at, obviously, is looking at price. SPX here, we've got to move higher. We are just underneath the highs of the year, and always got to look left. And we've drawn a point at the top, and here is the gap, and the gap takes us up to about 41.20. Okay. On a weekly chart. Here we got a downtrend from the mid-March to the next week, and then that continued. We did snip it earlier last week, and then we came back down and closed well below that zone. So there we go. Then I bring in my MOMO, my momentum indicator. It's a hybrid indicator, SKSD, RSI, CCI interaction, and it's a weekly. So don't worry so much about the overbought and the oversold from the dots, but let's focus on the blue and the yellow lines. You can see here the VIX is at a bottom and ready to spike up. This is typical sell in May, go away. This is VIX is low, look out below. Not a great time to be entering a lot of long-term positions in equities. Coming to the right, we look at SPX, and danged if we don't have SPX in an overbought situation and VIX in an oversold situation, and not only on the yellow and blue lines, but also we've got red dots, which means we're overextended on a higher time frame and we're underextended on a higher time frame on VIX. So if you look at that right there, your first thought is, my God, I'm going all in short, full port short. Not so fast, my friends. Why? Because that's the weekly. So then we got to drop down to the daily. And I got to hit the daily, and now the daily comes into play. Still have our same levels. But since we finished with MOMO, let's start with MOMO. VIX momentum is coming down from an overbought on a daily, and it's oversold on a weekly, the green dots. So this indication right here would tell me that the volatility should stay underneath this line for the next 2 days. 1 to 2 days, 1 to 3 days, but probably 2 days to allow. It would be absolute chef's kiss for VIX to spike, bounce up, and then push and make one more lower low. Where's it going to go to? Look left, and we go way on back here to November of 21. Yes, folks, that is November of 2021. That would be the next level, because looking left, we're at 52-week lows. There's nothing. When's the last time we were bound here? In 2021. Okay? VIX is low. Look out below, but don't short yet. Because why? Because VIX can keep going lower. We'd love to see the daily volatility drop below our oversold and have an oversold daily, oversold weekly, and then we'd be looking for a long wick, green candle, very similar to one of these bad boys. One of these bad boys, and they don't really have wicks. This is a just absolute textbook reversal candle right here on VIX. Long wick, green candle up, and we got some good signals back here. But let's not get into that. We're in the roadmap. Now, above VIX from there, where could we go to? I don't know where it's going to be down here, but then we target the lower gravity point, and as of today, before the market opens on Monday, as of today, the lower gravity point is right around 1730, and that's right where our trend line is. In the event that we push up, again, everyone knows 1994, 1994, 1994. Can I say it again? 1994, absolutely. This box is important, and it will be, oh, it won't let me draw over there. Son of a biscuit. All right, anyways, you get the message. There's a line right there. That goes back to the last few weeks. That goes back to the low that we hit on the 22nd of March, and then the base of the candle on the 28th of March, crossing over and looking. All we've done is peep, peep eye, peep eye, peep eye, slight miss, peep eye, slight miss. 1994, boys and girls, on the VIX, the VIX, moving to the right, getting into SPX. What do we see? Again, on the daily, weekly supply demand levels here, you've got 4. We're working on the 5th week from where we've gapped up. Now, on another video, and I'll share this later, that I'm going to do for FOMC, for our ITG members, but on another video, you're going to see exactly where these are and what this means. But if you look at this supply demand on the weekly levels, this gap right here, ladies and gentlemen, there are only 2 working gaps, supply demand gaps, going back 17 months. Only 2. And we're right now in one of them, and we're getting ready to work our 5th one. In the event that we drop, look at the confluence. We've got an uptrend line from the 13th of March lows, to the swing low last Wednesday. And we've pushed back higher, and we're back up into this weekly supply. I don't know where they're going to be this week. Okay? They're probably going to be higher because we closed higher. But we also dropped below it. So we'll wait and see where the weekly supply and demand zones are. In the event that we do fail, or we fail this trend line, the bottom of that box aligns with the weekly supply back of the week of the March 27th, and it aligns with gravity point C. So downside 39.90, probably absolute. PVI is a little bit above there, only because I don't know that we're going to push down that far that fast this week, but that would be my target going out 2 weeks. But we'd want to see that when? We'd want to see that after momentum gets into an overbought on a daily as well as weekly. It's already there on the weekly. The higher time frame is the weekly. Those are my red dots. Right now we're letting this momentum climb. This tells me 1 to 3 days we're going to be neutral to higher. Now, does it mean we won't come down and test this? Not at all. Does it mean they're not going to be down cycles like tonight, overnight futures? Not at all. But from a roadmap standpoint, volatility is saying 1 to 3 days a little bit lower. Equities are saying 1 to 3 days a little bit higher. We're going to get into an overbought situation on SPX on the daily and the weekly. We're going to get into oversold situation on the VIX on the daily and the weekly. That will be chef's kiss to now take off your put debit spreads, cover your short puts for profit, and now don't worry about hedging that trade with long futures. Let it run. Give it a little bit of room to let it breathe. Now, if we do push up, very much expect us to go back and put in new lows. Taking out the Thursday, the 2nd of February, taking out the February highs and putting in highs of the month and highs of the year, and that would happen Monday or Tuesday. Keep in mind, Monday, there's a lot of international markets closed for holidays, namely tonight, Hang Seng. And thanks to Moon Girl for pointing that out. Or no, Kita. Um, um, Kitchery for pointing that out. Um, it becomes important because as you have markets that are closed, algorithms can run with a little bit more reckless abandon. Okay, if we look left and we go to the spot of, you know, 41, 95, 44 on SPX. If we look to the left, we're going to go back into the August highs. Now, I mentioned earlier, the market, if it gets up to this zone, we're probably going to go back and at least fill this gap. And that gap's going to take us up to 21. But you know what? Let's just go ahead and say let's just go up to our white box. So in the event that we do take out the February highs and put in a high of the year, we're probably going to at least fill this gap. That's going to take SPX up to, you know, about 42.25, 42.30. So that's why I tell everybody, man, you do not want to short a double top per se ahead of time. You want to see how price action responds. There's going to be a lot of people that might get stopped out there thinking we made new highs, the market's going to run. Could it run to 43.25? Absolutely. Market can do what it wants to do, but it's not going to run there this week on one push. Again, FOMC, Apple, AMD, there's enough earnings there to push it. PVI's got some 52-week highs on NQ and QQQ. So again, it's possible. But what I would be looking for is a short in the 42.20s. Again, there's no supply demand zone drawn here. There's no market profile drawn here. I just wanted to put out correlations of volatility, correlations with SPX for you guys to get a glimpse on what's going on. We've got all three gravity points are underneath us. A and B are, you know, they literally are sitting here doing the Texas two-step right on top of each other. And so that's going to become an important zone, 41.37.37, 41.37 half. I'll be looking to see if that trades. That was the top of the candle on Thursday. That was the bottom, the open, basically last Monday. And again, there's a lot of confluence working right across here. And it's kind of right smack dab in the middle of this 5-week. It's currently 4 weeks, but we're getting ready to open the 5th week of a balance period here between this box and this box. And one of these two gaps is going to fill. If we play up into FOMC, I'll be taking shorts or long puts. If we play down into FOMC, I'll be probably taking long calls. So that's it. 12-minute video. Guys, have a great evening. Don't panic. There's going to be plenty of opportunity to sell theta this week. You don't have to sell PVI on a Sunday or Monday for it to be profitable. If you wait, a couple weeks ago we waited. We were able to launch some puts at $11.60. And if you just do one, guys, that's $1,100 for one trade, for one contract. Super easy to hedge. Guys, that's all I got. Vet, I'm out. Peace.